everyone, this is the Trader Investor, and in this video I'm going to show you how to understand where pullbacks terminate. Pullbacks, rallies, where do they find turning points? I'm going to show you a simple process to identify these. And as always, for me, my starting point is save, structure, area of value, and where to execute. And by structure, I'm looking at the higher time frame to identify is the structure still intact as we're entering into a pullback or a rally mode. Are we reaching an area of value? Because that's the best place for termination. It could terminate earlier. I'm not interested in shallow pullbacks. I want deeper pullbacks that come into my strike zone, as I want to call it, but the area of value. So as it comes to the area of value, then where do I execute? And when I'm reaching at an area of value, I want to see price making higher high, higher low for a pullback to terminate, or it is making a lower high and lower low for a rally to terminate. This is basically how I look at the overall picture. This is how save comes into the picture for me to see this. And as we look into the charts, you'll be able to identify this easily. I start with my monthly chart. My monthly chart is still intact, but the reason why I'm showing you the cues on a monthly chart, trend line is broken, and I want to show you how we're at an area of value and how to take advantage of that. And pullbacks happens no matter what time frame you are looking at, whether you're looking at the monthly, the weekly, the daily, hourly, the minute, the second, it doesn't matter. Pullbacks happen. And for example, in the monthly chart, you can identify here some pullbacks. You can identify here some pullbacks. And some months where it's consolidating when you're looking at a lower time frame, those areas could also be areas of pullbacks, like this zone here could be an area of pullback. So then from here, we will go to our weekly time frame. And again, as you can see, here are pullbacks, 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 pullback, pullback. So every time frame has a pullback. But here, the overall trend, even though it's an uptrend, my trend line is broken, and we're going into consolidation area from that broken trend line. And when we go to the daily, you'll be able to identify some additional things in here. And so as we look at the daily, I have here down here an area of value. This has been support and resistance over a few weeks, prior weeks. Prices rallied to those areas and rejected. And then once it broke that area, it becomes a support and rejected as support, pulls back, rejected as support. So when we are reaching this area of value, this is where I want to focus my entries. Area of value, like area of value. And here's another area of value. And we will see between these two why the first one did not trigger and why the second one could potentially trigger. This is just something to look at because it's very important. Having a pullback, reaching an area of value is not enough for entry. So let me show you why this first one did not turn into an entry opportunity. So we had our pullback. So after this pullback, and as we reach this area of value, the next thing I want to look at, as I mentioned earlier, is a series of higher highs and higher lows. So we came down, we rallied a little bit, but instead of making a new higher high, we now have a new higher low. I mean lower high, sorry. Lower high. We form a lower high here. So at this point, I have no entry signal because we're not making a series of higher highs. So then price continues its downward movement. We reach a new area of value and we make another lower high. So at this point, if we break this area here, if we break this area here, then I am considering this is going to continue to the downside until it finds its next area of value. If it breaks the higher side, if it breaks this area, then price is going to make a, so this, we have this lower high from this highs, but then this becomes a higher low. And whatever price we reach at here becomes our higher high. So at this point, I can enter. So this is looking forward, how we project the next moves. But now let's look at the real example of what happened a few weeks back. So when we look at a few weeks back, when price entered the area of value, then price made a higher low here, and price made a higher high here. Now, of course, you don't wait until here to enter, because for me, my entry would be as soon as I break this area here, that's my entry for the long side. So we came to the area of value, we made a high, a higher low, and another higher high, another higher low. So we're continuing that trend, another higher high, another higher low. So until some lows are broken, then that uptrend continues. But then when we start to make higher highs, when we fail to make higher highs and we continue to go to the downside, then that trend is broken. So as you can see, this is on a daily basis. This is where you can target and structure your positioning, waiting for area of value to be reached, making a higher low, continuing to make higher lows for your entry until that is broken. And for instance, this low here was broken on this date. So because this is broken, we know we're not waiting for the uptrend to resume yet. I would like to see price come back into this zone somewhere here before we consider entering any new position. So in somewhere in this zone. But what helps at times is to go into a lower time frame and being able to capture those moves a little bit sooner. If you are able to trade lower time frames, then you'll be able to capture those moves a little bit sooner as we come into an area of value. We'll go back to this example here, this example right here. As we got into area of value as a number one, we made a higher low here, and then we broke this and made a higher high here. This is our entry. And as long as we are continuing to make higher lows, this is still in a strong uptrend. And when we fail to make higher lows is when we are more cautious, or we're considering hedging our positions, exiting our positions, whatever the case may be. So this is where lower time frames will help you identify entries a little bit sooner, but it's not necessary. If you're only able to monitor your charts in the evening after work, by all means, it's a valid entry, because what you're waiting for when we reach area of value, you want to see new higher lows made somewhere around here, new higher lows made, but we didn't make new higher lows. We continue to make new lower lows. We continue to drive that until that reverses. So it appears in this zone, we're starting to reverse. Unless this is broken again over the next couple of days, it's okay. We're continuing on that uptrend, but because we are in the monthly trend line uh, zone on the downside, we're cautiously waiting for it to resume its long-term bullish momentum. So this is how you can easily identify when a pullback terminates. And it doesn't matter what instruments you use. You can do the same analysis on crypto, for example, on Bitcoin. You can do the same analysis on the hourly chart. When price comes to an area of value, is it making a higher low? Absolutely. So when a new high is made, that's where you want to enter and then ride it up until that structure is broken. And the structure, if as you're entering lower time frames, you can also consider the lower time frame structure for your exits. You don't have to wait until the higher time frame is reached for your exits, especially if you want to do target one where you take off 50% of your position. So you can look at structure broken on a lower time frame for target one and then ride the rest until either you're stopped out or you reach the other end of the longer time frame support and resistance. So this is a very easy way to identify that a pullback is terminated. Main thing to look at is, are we making a series of higher highs and higher lows, or are we making a series of lower highs and lower lows? So excuse my handwriting. I'm left-handed, but I use my mouse on my right side, and so my writing is not as clear, but you get the idea. Higher high, higher low tells me that I'm continuing the bullish trend that was before the pullback. So the pullback is terminated. I will go in. Lower highs, lower lows says after the rally of bearish movement, I'm going to continue that bearish movement. So I'm going to look for those entries. So this is how I easily identify those entries for pullback termination.